Focus, something that our colleague Sudarshan pointed out at 9 a.m. today, that is GAIL, and a tariff hike consultation paper is something that is being deliberated. GAIL doing very well in the session, and HDFC Life, one of the few stocks that are reacting a little negatively to earnings. H1 is expected to be slightly tough for the company on a high base. No wonder then the stock is lower by 1.5%.
This week, we have SBI Life also reporting numbers amongst many others. So we'll see if SBI Life also has a tough Q4 and a guidance. But let's talk about Just Dial, because that's one of the big movers today. 9% up on Just Dial and 12% up now. Let me tell you 3 quick reasons why the stock is up despite a muted Q4. One, collections, which is basically cash collections, is improving. Collections in Q4 was up 11.3%, better than what we've seen in the prior quarters. Secondly, the cash on the books is 60% of its market capitalization at more than 5,000 crore rupees. And 3, even as the company's growth is a bit challenging to come by, the company is improving its margins. In FY25, the company's margins went up by 860 basis points. So from 20.8%, EBITDA margins in FY25 were closer to 30%. That's a big improvement. Now, as I said, Q4 is a slow growth, In fact, growth has been slow for Just Dial. In Q4, the top line growth was 7%, lower than what we've seen in the last 2 or 3 quarters. Margins, though, the company's held steady, closer to the 30% mark, and profits aided by higher other income is up 20% on a quarter-on-quarter basis. There is a conference call later today at 6 o'clock, so we will get more clarity. But 3 reasons: collections, the cash, which provides downside support, and the fact that margins of the company are very healthy at 30%.
Reema, were you surprised by